recorded. All right, welcome everybody. It is 3 o'clock here on Thursday, and welcome. We've got our weekly coaching. Please remember, you can chat your questions into the Q&A, and I will share them with everybody and queue them up in order. I've got a few questions that came in via email, so we'll answer those as well. Hope you guys are having a good day today. It's been quite an interesting market. It's been up, it's been down. We are on the positive side, so today would have been or could still be 3 losing days in a row for the Dow, which would be the first all year, believe it or not. Find that very amazing. But just to get started, we do have our lovely disclaimers, just reminding you that I am not here as a licensed broker. I'm here to talk to you regarding the education of trading. Obviously, we will be bringing up live examples, so please make sure that anything that we bring up, you justify for yourself whether or not you want to place that trade or not, but I am not telling you that you should or should not be placing any trades whatsoever. I'm going to show you how to place them, why to place them, when to place them, but you have to ultimately make that decision and be responsible for, of course, your own actions in the market. If you have any questions about trading options, there, of course, is an awesome brochure called The Characteristics and Risks of Standardized Options. You can get it right here at the CBOE's website. It's an awesome reading if you're having any trouble sleeping. That being said, we're here to talk to you about the markets and, of course, not solicit any accounts. All right, I'm not a broker and certainly can't do that anyway. Any questions? Of course, you have my email address, Ralph@Omegatrades, or you can use the support one. Please give me a call if there's anything you need to discuss as well. Okay. So let's go back and now take a look at some of the market. And I do want to bring up the S&P 500 and take a look at the spiders and see what we've got rocking and rolling here. So we can see we had a very, very long run in the market, okay? And we've obviously had a very good steep decline here. This is a very nice decline. This is an orderly decline. It hasn't been out of the normal order of things in terms of, if you think about what would be out of order normal. Think back to 08 and 07 when the markets were going rampantly all over the place and whipsawing all over. So today we find something kind of interesting here, and I want to point it out if you haven't seen. Let me zoom in. Something kind of interesting about where we are right today is, grab a line here and show you. We came down below this gap up, okay, back in May, and we have held it. So I'm going to draw a line here. Oops, helps if I draw the line horizontal. There you go. Okay, so there's that line that we're talking about. It's at about the 160, just under 161. All right, we are above it. We clearly got below it, and it looked like the market felt that was a buying opportunity to pop in. And you can see that we have come well off the floor. Okay, and let me see if I can get. It's real time, but I don't have the volume on here. Indicators, volume. There we go. Okay. There we go. Let me slide that down. So you can see from even the volume today that we have a pretty, well, that's not going to really show it because it's not closed yet. I'll have to show you another volume chart. But volume isn't too bad, put it that way. Okay. So we have some volume that we can look at. We're going to look at some of our positions as well. Let me just bring over a chart with a little more volume indicator on it. And so you can kind of see what I'm talking about here. Let me bring this over and just shrink it down so we have our side information and our stuff. Macy's actually giving us a beautiful signal. We're going to talk about that as well. Someone remind me to make sure I do tell you about Macy's. Okay, so here is today on the spiders. Here is our volume. You can see this larger volume block over the last couple of weeks and over basically all of May. And then you can see the spike in volume. It decreased a little bit. You can see that this, the volume spiked, but then you can see the volume stayed relative to this whole area, the whole trading range for the last couple of weeks. If we would have seen, volume spike and then a huge drop off and then a huge spike with crazy volume, and you can see yesterday was a good volume day. Today is going to be a little lighter than yesterday, but we are getting a little bit of a drift higher, so that's kind of a good thing. MACD, stochastics, moving average, convergence, divergence, and stochastics. These are talking about momentum and take two indicators. MACD, it takes two moving averages. Stochastics is just taking a bunch of math and talking about the overbought and oversold positions. So what we have here is we have the possibility of it coming back around and being a buying opportunity here. Okay, so today is kind of an interesting day here because we did stop this downtrend, but I would not say that I would go jump in bullish here without any with just throwing caution to the wind. So let me just send in a couple of things here. So a couple of questions that did come in that I want to address was this was I always I get a lot of good questions, so don't feel bashful about sending them in. And so one of the questions from a newer subscriber to the chat service, to the coaching, and the question was, I find it difficult to find an equity with a large enough premium to trade. Any suggestions? So yes, there's a couple of things that will kind of determine what is good enough for you versus good enough for me. But in general, for example, if if I want to look at an options chain, which we're going to bring up right now, so let's take a look at this. Let's do this. Macy's. Macy's has a really nice run. It's had a nice pullback here, and we're getting a possible entry on a bull flag break. Okay, now if you don't know the technical term what a bull flag is, it's a bullish continuation pattern after a downtrend or short-term downtrend. All right, let's say you want to go out and buy the stock and sell a covered call. Okay, or you're you're just looking for some opportunity to place a trade. So the question is a great question. It has a lot of answers to it. So that's the one thing you might find nutty, is that there are kind of a lot of questions that answers that this question can generate, because it depends on the trade that you want to do. If you're looking to buy a directional call or a put and go long or go short, then you want to get them as cheap as possible. You want cheap options. You want to get a good value. If you're looking to sell, then you kind of want something that is overvalued. Okay, but let's just stay with the most absolute standard of options trade, which is called a covered call. And so if you were going to write a covered call on Macy's saying, you know what, I like this bottoming here. I think it can get up to about this, almost $50 range, which is a nice couple of dollar move higher. That's a logical thing to think about. All right, that makes sense. Okay, so if you're going to go take a look now, let me bring up the options on. Oops, sorry. On trade. Bring over that trade page. Okay, so bring over the trade page on Macy's. So one thing, depending on the trade you're looking for, each trade is different. So, one thing I could tell you is if I'm going to place a covered call trade, I want to generate about a 2 to 4% rate of return on that sold call. All right, so what does that mean to me? Well, 2% of 50 would be about $1. Okay, so if I was going to get $1 at the $50 strike, that would be something that is on the lower end of what I'd be looking for. Okay, so it's close. It's not great. 1% would be 50 cents. 2% would be $1 on the sold call. So your break even is about 49. Okay, so you're basically able to say, you know what, I can sell this $50 covered call for 80 cents, and I'm buying the stock. Essentially, I have to put out $4,800 to buy the stock to gain about $80 to sell the call. If I get called away on that stock, they're going to take it away at 50. If I buy it at 48.20 and they sell it on me at 50, 48.20 to 50 is $1.80. I collected $1. I collected 80 cents. So $1.80 and 80 cents is 260 bucks. So on my $4,800 investment, my rate of return or my return would be $260 for 43 days. So, when you look at that, what you can say is, all right, well, that's $2.60. Divide that by 48.20, and that's a 5% rate of return for 45 days. Okay? If I take 50, which is the call, and I multiply that by 0.8, I get 4%. Is that a 4? No, I'm sorry, that's wrong. If I take $80 and I divide that by 5,000, 1.6. So I'm getting a 1.6% rate of return for 43 days. It's not exactly where I want to be, but that is close, and it's pretty comfortable for me to place that trade. So it's on the lower end of the spectrum, but for a covered call, that's how I would look at it. You can see that the options are in the mid-20s, and it's volatility, what's called implied volatility. There's nothing out of the norm here. They're all relatively within a decent range, nothing spiking. So if I was going to look at Macy's, I would say, all right, buying a call or buying a put, their options are relatively priced. They're not very expensive. There's no spike in volatility where I'm overpaying. So that also means it's not a very volatile stock, which can be nice because some people don't want that volatility. And so, that's a good thing. So these are good parameters for basically, directional buying of a call, buying of a put. Selling of a covered call isn't awesome, but you got to remember where volatility is in general with the stock market right now. Stock market is very low in its volatility because we've had such a giant run. Okay. So now what would be an alternative to that covered call is going out and buying a calendar or diagonal. So instead of buying the stock at $48 or $4,800 for 100 shares, I can go out there and buy the $40 covered call for $900. See, let me show you. Let me show you the difference here. Here's the max loss is $915 for the call versus if I buy the stock, 100 shares, is 4,800 bucks. Okay, so I can go out and I can buy this $40 leap option, okay, because it's January of 2014, and then I am selling 80 cents against that. So when you look at it that way, as an alternative to buying the stock, this is a much higher rate of return. You're going to make $80 on your $915 investment, And so you're making an 8.7% rate of return over the next 43 days. Your max exposure to the market is 915, okay, versus $4,800. Okay, so 4,800 bucks times that by 20% is 960. So you're using 20% of the capital in your account to place that type of trade. If you've never done it before, let it go. It's something you can learn how to do. But in terms of, pricing an option, covered call wise, Macy's is okay. It's not the most fantastic, but in the market we are in, with the amount of volatility we are seeing, it's good. Okay? It's good. So I would personally look to place a trade like this with the weekly options, because I just love weeklies. I'm a big fan of trading weeklies. And so I'm actually doing an event on Trade Monster here at 4:30 today, and we're going to be talking about weekly options. So it's I'm a big fan of that, and so I love trading weeklies. I don't do calendars and diagonals unless they have weeklies available to me. Okay. So if there are any other questions, please just make sure you do chime them in, and if there's a follow-up to that, please let me know if I didn't explain. There are several other answers I can give as well regarding pricing. So please understand that each condition, each trade scenario does supply a different area or different answer for that, really, to be honest with you. And you also have to look at what the market's bearing. Right now the market is giving us a very cheap options. CALX, sorry, pulling it wrong. CALX. CLAX. Haven't traded this one in a while, but it is definitely a nice tradable stock. And so the question is, also nice bull flag entry forming. Yes, that is. That is a fantastically normal bull flag. Other than this one spike in volume right here, that is a bull flag, right? You come in here and you grab the trend line, and you can see, if I go right around there, we're pretty much looking at an entry, oops. You can see that right here at this $10.30 level is pretty much a good entry. That's pretty much what you're looking for. Okay, so that's, yes, a classic bull flag. That's what we're looking for. That's what we want to see. And so that would be a move from about 895 to 1064. Okay, so let's call it 9 to 10. Look for $1.60 move from here. Okay. I'm also reading some other questions and stuff that's coming in too. So they're a little bit private too, so I apologize. So yeah, so that's a classic bull flag. Like it, love it. Good call. You're obviously picking up what we're talking about. And then also ways to play or trade Tesla. TSLA. Tesla Motors. There's a Tesla car at my wife's job that when I drop the kids off, I see it all the time. Well, it had a really wild move, and it's pulled back just as dramatically, and so it's now looking to, you know, this could start a little bit of a bearish trend here. Okay, let me zoom in here. All right, this pattern is called the head and shoulders pattern. If you can kind of, where I'm circling showing like a shoulder, up here being a head, over here being a shoulder. Now that is a bearish trade. That means it's going to be a trend reversal. We haven't gotten it yet. It's something to watch out for. If we do get a break of this trend, come on. There we go. I would look for that break. Okay, so we're not there yet. If this does break down below 92.70, I'd be looking for a bearish trade on that. Getting it back down from 114 to 90. So you've got a 19-point move down from here, which, let's call it 20 just for easy math. Off of 92, 20 off of 92 is 72, which would bring you back down all the way down to this area in here. Okay, so but you got to get the confirmation. All right, you need to get it to confirm that you're going to get the break. This would be all null and void if we continue to see it trending higher. Okay, so I'm paying attention to that bearish side, thinking that it might break down. Okay, however, if we do not get the rounding of that shoulder, okay, and forming that shoulder and getting confirmation down, notice the word confirmation, how many times I've said it, then I'm going to look for this to bounce off of support and then get back up to this 114 level. But I would not want to get into that bullish trade until I saw the momentum start to pick up here. And that wouldn't be for me, getting above the high of today. Okay. I can move this over a little bit if I needed to, just to kind of make it look a little bit. Oops, I don't need another line in there. Darn it. Let's erase those. I'll erase them later. So, yeah, Mike, that would be a bear flag forming. Okay. It would be a very, let me put that question in so people can see what you said. Yes, that would be a bear flag that's forming right here. Let me erase this so you can see it. However, that is an aggressive bear flag because bear flags are trend continuation patterns. And this bear flag is coming out of what? It's coming out of higher highs and higher lows, right? You got to ramp up, pull back. So you got a higher high, higher low, higher high, higher low, and now we're breaking through here. So, yes, it is a aggressive version of a bear flag. I usually like to take the second flag down, not the first, because they're usually more confirming. This could be a fake out. It could find some support. It's not that I won't take this trade, but I want to see it on every. I want to make sure that my 3-to-1 reward to risk ratio is right there. I want to make sure that I'm within all the parameters of my trade, and I would be willing to take it. The other thing also, Mike, is that this is also getting me that head and shoulders pattern, which is a bearish pattern. So the two of those patterns combining right here and getting it on that breakdown is something I'd be intrigued to take because I've got two patterns confirming the same thing. Then the third component that I would like to see, kind of to spice it up, to give me a little more of confidence, because I don't use a lot of indicators. Okay, but there is one or two. For confirming TSLA, we see that the MACD is well overextended, and that we've got the stochastics already breaking down. So if we get the breakdown, we'll see the extension of this, and will see that this two-line histogram will start to roll over. We've already seen the red bars underneath here indicating that even though we're going higher, it's not really confirming a wildly bullish stance anyway. So, you know, when we look at this, you know, we can see that this might be rolling over. And so this is where it would behoove me to look for I'm not going to look for a bullish trade here, more of that bearish one, and I might get that momentum, kind of that snowball rolling downhill. Okay? Oh, you're welcome. And I do want to remind a few people in the room that your trials might be over, and so I would have greatly appreciated if you are here and you are willing to stay with us, that you do end up doing the paid service. If you've been here for the month of May, and now we're going into June, please respect the fact that you've been in here for quite a long time, and I've been, you know, allowing people to stay through their trials, but it would be time to join as a member. There is another question here as well on Facebook. Please remind yourself that if you have any questions, just a reminder to dump them in. I'll be more than happy to answer them. So Facebook, the big FB. FB, Facebook. Facebook, this thing has rolled over pretty significantly. So it had the great run. Okay, we had the bull flag break. It broke out of resistance, and if you were trailing your stop, you would have been able to at least lock in some profit. Okay, and then if you can see since then, it's just been more of a train wreck, and then it actually broke down out of a bear flag again here. So this is not giving me a good entry right now. And so I would wait for a little bit of a you know, stabilizing, maybe creating another bear flag before I want to get into this. It might continue to run down. You know, that could happen. And it's happened to me in the past where I'm like, yeah, I'm bearish on it. I'd love to take the trade, but you know, I don't want to step in front of. I don't want to try to catch a falling knife. And there's plenty of other trades out there. If I don't get my entry, I'm just fine with letting that thing go. And that's what might happen here. I want to get a confirmed entry, all right, and then I will. Then I would basically be looking to pop in. But it is definitely bearish. There's no two ways about it. There is no bullishness on this sucker wherever I see it. I mean, you know, there's no way to look at this thing as a bullish opportunity. I would not attempt at all to say that this is a bottoming. It's not my style to begin with. But yeah, this is definitely a bearish candidate. I'd wait for a setup. So kind of one of the things you might want to be looking for is for that to give you you know, that bear flag and then be able to just pop in. Okay. Again, it's all about the confirmation. Let trades go. Even if you kick yourself saying I would have made money on that, yes, you would have made money on it. And here's the big but word, right? But you had a bad confirmation. So the best thing you can do is put high probability trades out there, you know, and stick to your rules. All right? That's how the best traders trade. No problem. Absolutely. So that being said, let's take a look at some of the trades that we have put on. Okay. Take a look at what we've got brewing in our account and see what we've done. I also want to show you another trade that I have placed in a separate account. And I'm going to show you the trade on Apple that's just doing awesome. All right. So here's our account. These are all the trades that we've put in. We still have this CVX trade See, this is what I love about confirmation, folks. This is what it's just awesome to me about this, is that if you don't get the trade, you don't play. If you don't get the confirmation, you don't place the trade. CVX was an order that we have still sitting out here to buy on a waiting condition when the stock got above 128.50, 125.80. Well, guess what? It's now down to 120. So it hasn't gone in the direction we want it to go, right? So let's take a look. This is why confirmation is so important, because for every one trade you say, oh man, I should have got into this, I should have taken this trade, you see this right here. And the entry was again up here at 125.80, okay, which was all the way over here. Well, since then, we've just continued to drop and drop and drop and drop and drop, and we never got filled. Why can I tell you we never got filled? Well, because that's what really happened. Here's the trade right here. You can see where it says zero quantity. You can see up here where it says we're going to look to buy these options, and it never triggered. So again, placing trades that make the absolute most sense for the absolute best time to place them. Okay, American Express has this. We profited on this last week. We pulled our profit. Okay, and we then rolled it out to July at a different strike, and so on that trade we're down 175 bucks. Okay, so we definitely locked in a ton of profit, and so now we're down a little bit, giving back some profit, but we also have our stop loss in place to protect us so that we will definitely profit on those rolling trades that we were placing on the long calls, because we know that AXP, American Express, has been in a nice long uptrend. Okay, so last week when people said I would take profit here, you were right. When people say that, you know, I'll let it ride, there's nothing wrong with that as well. Okay, I have sent a few private messages as well to some people that need to get addressed some of their issues. So please just acknowledge that I sent them to you. Okay, you can see we have a very nice support bounce here off of this $73, $74 and change level, and so it looks like we might need to move our stop loss up. Let's see where that stop loss is at. Okay, because again, folks, the secret to trading isn't getting in and getting out. It's everything. It's getting in, it's getting out. It is managing the position. So right now we have a stop loss in here to tell us to get out if this thing falls below 71.90. Well, you know what? I'm going to look at here and say there's support at 74.80. I'm going to come back down to this like 73.40 line, and I'm going to push my stop loss up to about 73.20. Just get it below that other area of support. So that means I come in here, and I will then right-click on here, and I'll cancel and replace this order. Okay, and by canceling and replacing the order, I'm going to come over here and open this sucker up, and we're going to move this up to 70, what I say, 73.20. Send and confirm. Boom. All right, so now you'll see here's that order, and it's sitting there waiting for the condition. Okay? Absolutely. Yep. Yes, absolutely. A couple of private answers, sorry. If you want something private, I totally agree, and I will definitely keep them there. Okay. So, yep. Unbelievable. Yeah, so, you know, sorry, I had a person in here that was that's been in here for over a month, and they keep trying to come back under different names. Sorry, I just don't get it. You know, time is money, and I will work with everybody as much as I can, but you know, I have to make a living as well, and there are people that just like to take advantage. That's quite unfortunate. So AXP is still working out pretty well. You can see this trade is down 175 bucks, but overall, we're doing pretty darn well on it. IWM. Now, here's a trade we can talk about rolling. Okay, look, we sold this for 96 cents. It's now worth 4.5 cents. Okay, so we've wiped out all that. Okay, now we have this long call that's lost a bit of money. So what we're going to do is we are going to close this out for a nickel, and anything under a nickel with Thinkorswim there's no commission charge. All right, so it's all about saving money, right? People will make fun of me. Why do I want to save, let's call it $1 on 5 trades? Dude, well, that's $5. All right, if I see $5 on the floor, I'm picking it up. Why not save $5 in my trading? Okay, and when that adds up, the amount of trading I do, folks, when you can save $5 every couple of trades, you end up paying for your own trades, right? So we're going to go out there, and we've got this long call position. Okay, at 97, and so we're going to go out here at this 98 for next week, and we're going to sell this for 78 cents. We're going to do this 5 times, and now we're going to sell 78 cents and just reducing our cost basis on this trade. Are we still down on the trade? Yes, we are reducing our cost basis on the trade, which allows us to be able to reduce the loss on the trade. Okay, we can't lose $2.80 anymore. We just collected 80 cents. Our max loss in this trade is $2, but we collected, I forget what, on the last piece. So when you look at that IWM, and you look at it over the last 2 weeks, and again, if this is new to you, just let it go. It takes some time to get some of this down. You can see we sold that. What have we done here? Oh yeah, we've been rolling this sucker for a while. Okay, this calendar we put on, and we basically just closed out that position today, the June 1. Okay, look at that. We sold that for 96 cents. Okay, and then we just sold this for 79 cents. So let's just round that to $1.70. So that's $1.70 that we've created off of a position that is $2.80. So folks, this trade has a max loss of $1.10. That's all we could lose. We collected 79 cents. We collected about $1 on the last trade. Okay, so if our long call goes to 0, the max loss we can take in this trade is $1 times the $1.10 times 5. Okay, which is basically where we're what we've lost already. Okay, so we pretty much have maxed out our loss on this trade. Pretty incredible. All right, give or take a few bucks. So that's position management. When you understand how to trade this type of trade, which is called it's just a straight out diagonal. Okay, this is kind of a covered call on steroids. You're selling an option against another option instead of selling an option against a stock. Okay. So, Ron, your question is, does our trigger point change? Now, I'm sorry, I just picked that up now. On which stock, if you don't mind repeating? I think I did answer all the questions that came in. CVX, CVX, thank you. Let's bring up CVX again. So, CVX. Well, the bull flag is no longer a valid trade. Okay, so when you look at CVX here and you look at this large extended drop, it's no longer, the targets and everything we were looking at are pretty much out the window. And so, we need to reset this back up. Now, you could say, well, Ralph, I could just do this and I get a very long extended flag. And you would be right, except for one small piece of what a bull flag is. A bull flag is a trend continuation pattern. Now, when the stock was going up, okay, and we were looking at it over here, it had not broken the 122.50 support line. or 122 in general. Well, guess what? It broke out of that. So now the series of higher highs and higher lows has been broken. So number one, the trend is broken. Now you don't have a trend continuation pattern anymore. So the trade is now broken. Okay? And so, you could say, well, Ralph, I could see from 112 to from over here at 112 to up here at 127, and then in the pullback. And that would still be a logical way to think, but for two things. 1, 2, 3, 4, 5, 6, 7, 8, 9 days where one has been up, and break of two areas of support. One which was around our entry. Second one was where our stop would have been. So Ron, this trade to me is kind of is out the window at this point. And I'm only leaving it in there to remind me to look at it if it does get some momentum to the upside here. But we can always look at it. It's always on my radar. So what we can do is we can come over here and just cancel this thing out and get rid of it. There's no reason to leave it there. Cancel order. Watch what happens when I cancel this order. You're going to see two things go away. Cancel order. And now what's left is just the AXP. Okay, because I had that contingent order there. So past triggers have been reviewed. Yeah, the past triggers were reviewed a bit. I was looking at them. Sometimes I forget that I've reviewed them a couple times already, so I do apologize. So yeah, I mean, look, this would have been a really nice trade. Okay, it just didn't pan out because it never took off. It never gave us what we were looking for. And if you look at some of the trades that are in the journal here, that's why I like to bring this up, because this is kind of a history, frozen moment in time that I cannot go away from. I can't get away from this. All right, so if I put a bad trade in here, okay, then you'll see it. And you can see where I've triggered things. Like, for example, Starbucks. Looking to buy calls on a break of 64.70. So let's go look at Starbucks. SBUX. Well, did we get that break of 64.70? No, we didn't, right? Here's 65, here's 64.70, all the way over here. This is when I called it out, right? Here, this is on May 28th. Here's May 29, okay? So here's May 28. I called it out here, okay? So the high of this day was 64.71, and I called it out after, towards the end of the day after the high was already put in. Okay? So this trade has been kind of null and void. It is setting up, and you can see a little bit of a difference here. Okay, you can still see where we're sitting at that area of support, okay, on Starbucks. So this is still a little more of a valid trade than you would see on CVX, because if you look at CVX, see the big drop there? Do you guys see what I'm saying here? You've had this really nice run, bull flag break and a run, and then support broken, support broken, support broken, okay, versus Starbucks. And then train your eyes, just kind of take a mental snapshot of what you see here over the last little bit of time on CVX, and now look at Starbucks. And do you see a difference? Do you see how the drop here is not as great or as violent? So this is still something that is setting up for a bull flag break that we'd want to get in, but now the entry is going to be lowered. We're going to be looking to get in around 63.50 and change, 63.60, somewhere in there. Okay, going on the same CVX bull flag. Would you? Let me see these two. What would the difference? What would the difference be, let's say, on IRBT? Yep, exactly. So Disney was another one discussed as well. And with Disney, you can see we talked about Disney's continuation last week. And with the Disney continuation last week, we haven't gotten anything, right? So last week was, what's today, the 6th, so right over here, the 31st, right? So we talked about the 31st, which is already over here down. The entry, okay, would have been, if you did get into this trade, all right, would have been over here. Your stop would have been over here, okay? And so what would have happened is that you would have either had a small loss on this or not have placed the trade. Okay, you could see that the trade has been broken. The trend has now shifted, okay? So either you come out of this with some type of small loss or you never really placed the trade because, you know, we talked about it here last week, which was after this giant drop. Even if you did take the trade, it's a small loss because you would have had a stop loss down here, okay? And when you had this big gap up and the next day stay up here, you should have been able to move your stop loss up to about 65 and giving yourself $1 of a loss. All right, so I'm trying to give the benefit of the doubt that I could have been wrong here. There's a lot of times I can be wrong, so I'm going to try to defend a trade. I'm just trying to say that you might have taken a small loss, but not a huge one. AZO. I don't remember bringing up AZO. AutoZone. Just, by the way, Bloomberg is on. AZO is looking pretty good. It's got a little bit of a nutty glitch here. It had this bull flag gap and then broke down. So I really wouldn't see this as a very clean a clean flag, because what you want to see is you want to see it. Yeah, a lot of these trades never made their triggers, Ron. Exactly. But I'm just saying, let's say you did place one or two of them early. At least the losses have been not too great, right? So I'm very forward in terms of, if I'm wrong, I can admit to when I'm wrong, and if there is a possibility where we could have taken a trade and possibly lost something, I'll say, yeah, you could have lost something. So you know, but still, it would have been a small loss. Okay. AZO is definitely setting up, but one thing that does make me concerned is this blip in here, kind of this. It's got a little too much congestion going on for me, and there are so many other possible trades out there that this is just not good enough. Okay. I would rather see. Okay, and so what am I saying about that? You see this bull flag right here. Okay. You can see it right here, okay, right through here. It then popped and then fell back down. So the higher high, higher low, higher high, now it's coming back down and making sort of an equal low. That's not really qualifying as a true bull flag. Now, that doesn't mean that it's not going to make a run. I'm just going to kind of wait until it gets well above today's high and get in a little bit, if I was going to, get in a little bit on kind of a little bit of a push, a pretty good push higher. But because there's so many other trades out there, I really am not too concerned with that. CVX is kind of, you know, the same type of thing. I really want to get good momentum. Disney, you can see, is at support. It has a pretty good extended downtrend here over the last month. And again, that same type of philosophy. I really want to have it show me something. Go prove to me you're a good stock to buy, or basically buy the option. All three of them, CVX, Disney, AZO, kind of have to prove something to me. They got to prove something to me before I'm going to get into them. I'm really picky. I'm a real picky trader. Netflix gapped up, and it created a high, a lower high, a higher, a high, a higher low, a higher high, a higher low, and now we're getting a lower high if this does not push from here. And so this is kind of giving us a kind of a skewed head and shoulders. Here's your left shoulder. Here's your right shoulder. Here's your head. So this is really looking more of a trend reversal to me, where if you see a breakdown of about 115, you might see a nice drop from 115 down to about 170, 185, 190. So yeah, that's a possibility. And Ron, I'm going to put that back out there because I like your answer right there. Never entered the trade because they never hit the trigger point. And that's such a classic, awesome answer. We don't hit the triggers, we don't place the trades. Be very, very picky. Like with this Netflix, I'm only going to get into this Netflix if it continues to break down. And if it continues to break down and I see that continue to happen, I'll join the bandwagon. Okay, but I'm not going to be the one starting the revolution. Okay, that's just not the way I trade. I want safety in numbers. Okay, always do. Always want safety in numbers. Okay. Let's see what else we got. Oh, I do want to bring up this Apple trade. I want to show you this pretty cool trade on Apple. Here's Apple. A-A-P-L. You can see that Apple has pretty much gone sideways here from 421 to 465-ish. So let me bring this trade over. It's in a different account. It's actually a personal account. So let me bring this up so you can see it. And it's a small trade. I traded it with somebody in a coaching session because they said that they couldn't understand how to do it. So here's the trade. By the way, it's a one contract trade, okay? So take a look at this. All right, we bought two options. We bought an option at $16 and $16.50. So we've lost 310 and we've made 165. Okay. Then I sold options against them. This is called a double diagonal. It's basically putting that covered call on steroids, right? Drastically, because now I can do it on both sides of the aisle. Okay. So am I going to be able to do this here? No, shoot, it's not going to be able to shoot. Okay. I need to get the calendar, come on, view trade. Well, we'll just have to do the math manually, okay? Let's take a look at this trade. We sold two options for $6.69 and $6.87. Right now they're worth 64 cents and $4. So we've made $600 and we've made $250. So right there, that's about $870 in profit. Plus here we made another $165 in profit. So 620, 870, 900, and 1,030. We've made 1,030, but only lost 300. So for a week, you can see I put this on the 28th. For a week, I've made 1,000, lost 300. So I've made $700, okay, on a trade that is out of pocket. Just give you an idea, so you can say, well, how much did this cost you? $1,800. So I've made a pretty nice rate of return in a week. All right. Now, what am I seeing coming up? What's going on my radar? Well, you can see from the spiders, and of course, please make sure you put in any of the questions that you do have. We do have a bullish day today. I want to see this continue before I'm confident that we're going to get another bullish bounce. We got to remember, every bad piece of news, every piece of news that's come out that's been bad has been shrugged off in this market. So I'm not going to second guess it. Okay, that being said, I do have this little watch list here that I like to follow, and it's got some good stocks in it. The only way I would trade Apple is sideways. Okay, I don't think it's going to drop pretty great. I think it's going to just run sideways. AXP is not a very clean flag. There really is no entry. Costco, okay, we were talking about Costco maybe making another run to the upside. Well, we haven't gotten it. CVX, we talked about that as well. Broke down too much. Deere, it broke out of support here. So this is a trade today that broke out of support. If you want to be a bit bearish, your entry would have been today. It's not a bad entry even to get in now. You're looking at a move from 98 to 85. So, I'm sorry, 88 to 85. That's a $3 move. It's not a very big move. TBT, yep. I don't trade TBT much, to be honest. Very weird candle. This very, very weird candle. It looks like, the Bears were trying to take control of this thing and roll it down, and the Bulls did find, an area of support here at 66 and said, that's enough of it going down. Thank you very much. I'm going to push this thing higher. I would say if you wanted to place a trade long on this, watch out for overhead resistance at about 69. But you've got about a $2 move higher. If you get above about 67, I really want to get above 67.25 for a long, buying a directional call. Now the thing is though, make sure that if you get in about 67.25 and your target is to get up to the high up here of 69, that there's enough profit in there for you, because there isn't a lot. That's my concern, is I don't really see enough profit in there for me. But if you can justify the profit, then maybe it's something that you want to pull the trigger on. But for me, my concern is risk reward. This might give me a good entry, but I'm not seeing a good enough risk reward for me to place the trade. Again, I can be wrong. It can still continue to run. Decker going sideways here. This is another trade, kind of like the Apple that sideways is the trend. Macy's, though, Macy's is giving us a nice setup here today, and it's very close to giving us our entry. Okay, so when you look at, let me bring over this a little bit more because I do want to bring up a few more studies. Here's the Macy's. Okay, you're really getting, I would say if tomorrow opens up, okay, you're going to get a move from 45 to 50. That's a $5 move. Okay, if we do get another update tomorrow, you're going to see the bottoming out, a rounded bottom on the stochastics. What were my strikes on Apple? I bought the July, where is it? You trade. I'll bring it over here. I bought the July monthly call at 445, or is that it? Yep, July monthly call 445, and I bought the July 440 put, okay? And then I sold the weekly 440 put and the 445 call, okay? So I needed to roll this thing. I wanted to roll it today, but I didn't get a chance. So I will probably roll it tomorrow at some point. I just got to remember to get in there and get it done. But Macy's is giving us a really nice entry here. We're looking for a $5 move up. Okay, so That's really nice. All right, I'm going to bring up another chart because I love Fibonacci extensions. You're welcome. Fibonacci extensions are awesome to me because what I love about them, is looking at a chart with fibs on it. And why do I like the fibs, the fib extension? Well, because it has a nice technical piece to it where I'm looking for a move from here to here, and I'm going to get in on about right here. Okay, now I'm looking for a $5 move. Let's see if technically a Fibonacci retracement gives a Fibonacci extension gives me what I'm looking for. $5 move on an entry of about 48.37 plus $5, okay, is 53.37. So 53.37. What is 53.37? Oops, I kind of zoomed in a little bit there. Let's reset this chart, auto scale. And move this thing down. So look at that. I'm looking for a number of $5, okay, based off of, the move. And a break we talked about here at 48 and change. Plus $5 from 48 is 53 and change. So the Fibonacci extension is telling me that if I get the move I'm looking for, okay, let me just zoom in here. If I get the move I'm looking for based off of my belief system, my pattern I see, I can dovetail that with a Fibonacci extension, and boom, look at that, we get the move we're looking for. So to me, that's a very nice trade setup, and I would take that trade if it basically opened tomorrow above $48.37 or got above $48.37 tomorrow. That's what I'd be looking for. Okay? That's one of the better ones of the trades I've seen for an uptrend. Let me just quickly go through a few more of these. I did mention also, by the way, Monsanto is breaking down. What did I put here today? Deer broke support looking for a drop. So Deer's breaking down. Decker sideways. LinkedIn for looking for another drop. Waiting to enter of 162.40. Okay. Here's LinkedIn. So this is kind of giving us that bear flag pattern. Who brought up that trade the other day before about something in a bear flag? Do you see the difference here? A bear flag is a trend continuation. We had a high. We had a drop. We had a lower high. We had a drop. We had a lower high, we had a drop. We are now getting into a downtrend in LinkedIn, and we're getting, even though a very nice day today, if this thing does break down tomorrow and get down below the low of today, that would signal another downtrend in the stock. So there is a couple of series of downward moves that I would want to see continue. All right. Netflix is going sideways. Nike, I'm not really seeing much in. Starbucks, that's another one that really is giving me a pretty good setup as well. It's not as good as Macy's, but there's a nice little piece there. I would say that if you get Starbucks, again, another one right here. Kind of above today, get above today's high and get in about the 63.30 something level. That's where I'd look to enter. Okay, wipe yourself off the floor a little bit. All right, and get off that support, and I'd be confident in getting back into that. Okay, SHLD breaking down, but I don't really see a good entry there. AT&T is setting up possibly for a bearish move. Here's another bear flag pattern. You can see we're actually finding some bearish trades now, which a few weeks ago people asked me to find bearish trades. I couldn't find really any, and I was really struggling. So here's that bear flag, If we break down below 35.24, there's a downtrend. Okay. So, that being said, we've got a few bearish trades. The T is a good one, looking good for downside. Macy's and Starbucks looking good for the upside. Visa, it's kind of not really looking good for me. And Verizon, I thought was going to start breaking down more, but today nullified that. Walmart is still looking to break down. Okay, Walmart is still looking to build this bear flag pattern. So we will definitely be bringing it up again next week. You can see right there. There's that flag pattern. Okay. Any other questions? I know we're running a few minutes over. Potash. We'll finish up with potash here. Potash. Well, potash, it had this interesting move, very, very violent, very, big trade, right? Look at this thing, how fast it jumped up, and then it rolled over very, very quickly, and now kind of just bounced. And so, if I would really want to see, go bullish on pot, I really want to see it really start to pick the pace up a little bit here. I am not very confident in it, though, because it's got some overhead resistance here in 42. I would really see possibly if it breaks down to 41.15 as a bearish drop. If it does get above this 42 line, I will miss part of the move. You're absolutely welcome, David. So, yeah, I'm not too wildly bullish on this here. More of a bearish. And there is one other thing I did want to bring up, because I am doing the event, and they've been awesome to me. So if you go to trademonster.com and you go to their free webinars that they do, you'll see that at 4:30 today, I am going to be doing a webinar for them on underneath education, free webinar. You'll see today. Oh, is it? You know what? You know what's weird? It's not here because it's going to happen very soon. So let me go to my email and go to my calendar, and I'll pull it up that way, because for some reason they take them down very quickly. Come on. But it is here if I go underneath the Trade Monster somewhere. I'll find it here in a second. But yeah, if you go to Trade Monster, I can, I'm sorry, I'll find it. And then we'll get out of here. I got to do a sound check with them in a few minutes anyway. Come on, bring this over. Let me see here if I could find it in my Google account or something. Oh, you know where I can find it? Right on my website. Oh, I'm so silly. Here we go. Go to here. Upcoming events. Sorry about that. Go to upcoming events right on my website. And again, if you guys need to join, the coaching that we do, I'll be more than happy to have you guys join us. There you go. There's the link to get to the paid events that we do. To become a member of this paid coaching. Let me go to the front page and you'll see it. I'm losing some good. Trade Monster right here. The benefits of weekly credit spreads. And let me see if there's a link in here. He emailed me the link, so let me get it for you. Because this is the third person that's asked me about it, and I didn't have it. Let me just pick it up here. Here we go. Here you go. You can find it right here. I'll put it into the link into the chat. Control C, Control V, save that. Control V. It's right here. You'll see it pop up now. So you're more than welcome to join us. Here it is. Benefits of weekly trades. I put the link in if you want to join us. Be more than happy to have you. And that's about it, folks. Sorry, Mike, I missed the Cisco thing, but I do got to get going, and I wanted to get a couple people asked me about this, and I keep forgetting to put it in. So sometimes I'm bad at getting that promotional stuff done. But I'm happy to have you guys here this week. Thank you for being here. Please remember, if you are finishing up with your trial, that you get yourself involved with us on a permanent basis. And I really appreciate you all coming again. We'll see you next week. Please remember to email me any of your questions, and I will talk with you all soon. Okay, I put in the link for you guys to get the PayPal taken care of, and I put the link in to get your Trade Monster thing in there as well. So, join up if you can this afternoon, and hope to see you next week in our next event. Thanks a lot, folks. Have a lovely week. Have a great weekend, and we'll talk with you soon. Take care.